guys, welcome back to the channel. Over the last couple months, we have seen rates continue to increase, inflation starting to come down, but prices are still staying considerably high. When you look at rent, when you look at groceries, when you look at a lot of different avenues, the prices of things are still staying at the same or continuing to increase. Let's look at exactly why this is, guys. So the rate of inflation is slowly easing. We've seen the highest price spikes in 4 decades. That is right, guys. In over 40 years, we have never seen prices this high. Yet the shocking of rising prices continue to have an impact on your paycheck and the psyches. When you're going out shopping and you're looking at things, the typical US consumer is looking at a gas station, looking at a grocery bills, still seeing the prices elevated, and they are not coming down anytime soon. We are seeing the consumer price index, so the actual price of things, still staying incredibly high. Now, consumers' perception of current unemployment has deteriorated the most. Jobs saying that are plentiful have kind of dropped from 43 to 47%. So it doesn't seem like there are as many jobs. Now, if you look at the news or you're paying attention to it, there has been an incredible amount of layoffs across the board, pretty much everything, as not only companies try to kind of offset the books with actually staff is essentially what they do for a majority of places. Now, as a growing share of Americans, now 41 or 61% now say the prices have caused a financial hardship in their household. So this can be attributed to a lot of different things. It can be poor budgeting, poor spending habits, but it could also be just not having enough money to actually cover the cost. So if you're a person who lives paycheck to paycheck, and then your essentially cost of goods goes up 10, 20, 30%, if there's an increase in rent, an increase in auto insurance, an increase of the minimum payments on your credit card, you could really just be seeing the starting point of not being able to borrow any more money or hitting a brick wall when it comes to actually being able to afford that month-to-month paycheck. Borrowing costs have increased. When you look at auto loans, credit cards, mortgages, student loans, even the repayments, they have raised significantly. Now, the only caveat to this, guys, is on the flip side, if you're saving money, saving rates are higher than I have ever seen them or I remember them. During my lifetime, I've been in banking for over 10 years, and we have rates in CDs that are 5% or greater, which again is kind of crazy, and the same thing when it comes to savings accounts. So what are we doing right now is really slowing the inflation rate. Eventually, the prices are going to have to follow. That means that driving a car, even though the price of gas is down a little bit, a lot of people not driving as much, the prices of gas are still up. Now, negative inflation, of course, would be pretty dangerous, removing kind of the price stability. And that's where I feel like the government kind of fell apart. And this is my personal opinion, is when it came to COVID. I know it was an unprecedented time, but they kept rates astronomically low, lower. I mean, it was, I think 0 to a 0.25 was pretty much where the rate was at. So keeping it next to 0. Then you couple that with all of the stimulus packages. For a majority of people, there were 5 stimulus packages that we got during COVID. A lot of people that were still working towards COVID, that gave them an incredible amount of discretionary spending. So when it came to a lot of things, the Federal Reserve, in keeping rates so low, just drove some prices through the roof. And if you're a retailer, if you're a big store, a consumer, a conglomerate, a lot of times you're not going to lower that rent. You're not going to lower those prices. You're not going to lower what you're already charging for items because you might be the only person in town who has it. And the prices are not expected to drop anytime soon. Now, of course, the goal of the Federal Reserve is 2%. That is the target inflation, is 2%. However, central banks are still saying there is a lot of room to grow. The annual inflation rate eased to 4.9% in April with the consumer index. Now, again, this is slowly coming down. A lot of people are saying that the Feds are going to pause with the rate increase. A lot of people, I believe it was 72% last that I seen, are saying that the Feds during June are going to raise another 0.25%, bringing the Fed's fund rate to 5.5, and essentially trying to lower some of the cost of goods sold and bringing, again, the prices down. Now, when you look at the actual items price year over year comparison, looking at April 2023, year over year prices are roughly 5% higher. They are 4.9% higher. Now, they take out food and energy out of that calculation. If you add the cost of food and the cost of energy into that consumer price index, when you look at April of 2022 to April of 2023, we have roughly seen a 5.5% increase in the cost of goods, period. That is it, guys. So when you think about last year, if you were working, if you're laid off, if you're unemployed, if you got a raise, everything on average, looking again year over year, was about 5.5% higher. Even looking at January and April, you were looking at 7, 8, 9% higher in the year 2022. So again, looking at kind of the April to July, I believe July of 2022 was the highest peak we've seen, which was just over 9% increase. So again, everything getting 9% more expensive with the consumer price index. Now, again, when you look big picture, rent is very, very high. We have seen rent go up 10, 20, 30%, depending on the place you live. Now, what are the chances that your landlord is going to come knock on your door and say, congratulations, your rent's going down $100, $200, $300? That is where I feel like a lot of people are going to be stuck, is when it comes to the housing market. Not only are they saying that the housing market, we could see a lot of issues with stability within the housing market. There's also a lot of concern when it comes to commercial buildings, commercial real estate, things of that nature. Just because if you've noticed, or if you've been to retail stores, a lot of retail stores no longer have physical locations, or they're closing. I know even locally here, a lot of the malls are almost completely vacant. It looks like, you know, a episode that you see of The Walking Dead, where literally there's probably a half a dozen stores in a 300 store retail outlet that are just surviving or going to close soon. Now, it's not all of a sudden that prices are going to go back to where they were in 2020. We might never see that again, guys, that prices actually get down to the 2020 prices or even the pre-pandemic prices. Now, inflation, we know, runs on about a 10-year cycle, but it is a very vicious cycle, guys, in the economy by promoting demand for higher wages, which triggers manufacturers to cut costs or have higher prices, or again, they balance the books with letting people go. When inflation does subside to normal levels, it'll be quiet, it'll be slow, it'll be a long, drawn-out process. Now, a 2% annual inflation rate will add more than 20% over a decade. So you figure if you're running a 2% annual inflation rate, which is where they're trying to get it, when you add it up over an entire decade, it is really, really a game changer. But of course, when you look at your day-to-day spending, guys, you don't really notice the cost over many years. It was just the sharp 10% increase that we've seen during the pandemic. So, all right, guys, so that'll do it for today's video. Let me know in the comments what you guys think, which items you have seen increased more than anything else. And as always, thank you guys for watching.